Imagine putting every single one of your eggs into one basket, tripping over a rock, and watching your entire breakfast shatter on the sidewalk. That's basically what happens when you invest all your money in one place. Portfolio diversification is the financial world's way of saying, hey, maybe spread those eggs around a little. Think of your investment portfolio like a pizza order for a group of people with very different opinions. If you only order one topping and half the table hates it, everyone goes hungry, but if you mix it up, almost everyone finds something they like. Diversification means spreading your money across different types of assets: stocks, bonds, real estate, cash, and sometimes more exotic stuff like commodities or international funds. The whole point is that when one thing goes sideways, something else in your portfolio is hopefully going right. Stocks are exciting, kind of like that friend who's either the life of the party or completely missing in action. Bonds are the calm, reliable one who always shows up on time but never does anything wild. And you need both kinds of friends in your life. Here's the beautiful mechanic at the heart of all this. Different assets don't always move in the same direction at the same time. So when your tech stocks are having an identity crisis, your bonds might be sitting there completely unbothered, doing their quiet little job. This balancing act reduces something called volatility, which is just a fancy word for how wildly your portfolio's value bounces around. Lower volatility doesn't mean you're giving up gains forever. It means you're not having a panic attack every time the market sneezes. A common mistake people make is thinking they're diversified because they own 10 different stocks. But if all 10 are technology companies, you've basically dressed up in 10 different outfits that all look exactly the same. True diversification cuts across industries, geographies, and asset classes, not just names. Your risk tolerance is a huge factor here, and it's basically asking yourself how much financial turbulence you can stomach without making a terrible decision at 2 in the morning. A 25-year-old saving for retirement can afford to ride out a bumpy stock-heavy portfolio, while someone retiring in 2 years probably needs a much smoother ride. Here's something history keeps teaching us over and over again. Markets crash, bubbles pop, and things that seemed completely safe turn out to be absolutely not safe. The dot-com bubble in 2000, the financial crisis in 2008, diversified investors didn't escape unscathed, but they survived in ways that single-asset investors simply didn't. There's also this concept called rebalancing, which sounds tedious but is genuinely important. It's basically giving your portfolio a checkup to make sure it hasn't drifted away from your original plan. If stocks had a great year and now they're taking up 70% of your portfolio when you wanted 50, you trim them back and restore the balance. Some people get really into this and rebalance quarterly, while others do it once a year, and honestly, either approach beats just staring at your account and hoping for the best. The goal isn't perfection, it's consistency, which is the most unsexy superpower in investing. One thing that genuinely surprises people is how international diversification works, because your home country's economy is not the entire world, even if it sometimes feels that way. Adding exposure to emerging markets or European funds means you're not completely tied to the fortunes of one single country's political drama. The honest truth is there's no one-size-fits-all diversification strategy, and anyone who tells you there is should probably be looked at with significant suspicion. Your financial goals, your timeline, your income, your personality, all of it shapes what the right mix actually looks like for you specifically. What's really cool about diversification is that it's not about being fearless, it's about being prepared, which is honestly a much more useful trait. You're essentially telling the universe, I don't know exactly what's coming, but I've arranged things so I won't be completely destroyed by it. If any of this has you curious about how to actually build a diversified portfolio that fits your life, or if you want guidance from people who think about this stuff every single day, do us a favor and check out our company links in the description. We'd love to show you what we can do for you.